we have the current stock market update for SOFI Technologies Incorporated, stock ticker SOFI. Before we begin, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons and leave your thoughts below in the comment section so that other traders will be able to find this information more easily on the platform. So as we can see here, the share price itself has now been influenced by the Fed rate decision. We did see a 50 basis point rate cut. I don't think there was any huge surprise there. Nothing that really altered the market in terms of what was previously considered to be the expectation. And overall, the share price movement in SoFi has been a bit probably disappointing for some people. However, with the price pattern that we were looking at here, and the possibility that share prices were going to be experiencing a buy the rumor, sell the news type of event. I don't think that any of this recent price movement is really much of a surprise. If you saw my prior video, you'll see that all of the prior chart markings here, trend lines and everything are as they were previously. I've not changed anything on this price chart. And as we can see, this W-shaped harmonic pattern is absolutely starting to unfold at current levels. So just quickly, what I want to do is sort of move into the shorter term time frame so that we can get a sense of where these near term support and resistance levels actually rest. So recently, we can see share prices moving into this roughly just above 850. There would be the first line of resistance that we would be seeing on this 15-minute time horizon, and then to the downside, support is really starting to form right around $8.05. So near term, if you're trading this from an ultra short term perspective, you could be trading a range here coming in at roughly 805 to 850. But we're starting to pressure the top side of that trading range here once again. So there is some scope here for some further gains going forward. But in order for us to really get a sense of where we're headed here, we do need to take some sense here, take stock of the longer term time frames. What I have here is the 4-hour price chart. So each candle on this price chart represents a 4-hour trading period. And as we can see, this harmonic pattern really is unfolding as expected. And it's a bit deceptive in nature. I really just kind of drew this in roughly on my own. This isn't really how that would work. Harmonic patterns are based on exact Fibonacci retracement levels. And the actual price pattern would look something a lot more like this. But as we can see here, we really did reach right into this potential reversal zone here. And share prices did start to move lower. I mean, this is how these patterns actually work. It's a series of Fibonacci retracement levels, and they're actually quite deceptive because what you ultimately see is a break of resistance here in the bearish pattern. So that can be deceptive because, the conventional wisdom would suggest that you get a break of resistance, you're probably going to see some stop loss levels from short selling activity. You'll probably see a bit of follow through there to the top side. Overall, a break of resistance is supposed to be a bullish event. But when certain price patterns unfold like this, and this is an advanced price pattern, I really haven't gotten into the specifics here. There are several different types of harmonic patterns. There's a bat pattern, a crab pattern, a butterfly pattern, Gartley pattern. These are all based on specific Fibonacci retracement zones, and they're all slightly different. But they all have roughly the same structure, and then the outcome for these events is the same thing. So we weren't only basing this this selling pressure that we are seeing here recently, with share prices heading back into the $8 mark. We were basing that on one, this technical price pattern that was starting to unfold, and then two, the possibility that the market was going to actually react negatively, even though we did see a sizable rate cut, which would influence the stock. This is a financial stock. Lower interest rates should be favorable, according to the conventional wisdom here. But a lot of this was actually priced in already. So when you actually start to see, the news event unfold, all of that's already priced in, and there's no more reason to start buying the stock. So there were a lot of videos that were being posted on this stock recently. There was a high expectation for share prices to be influenced by this Federal Reserve rate cut, but it's largely priced in. I mean, this really wasn't new information. If we had seen maybe a 75 basis point cut or something like that, then maybe you could have seen a bit more of a reaction. But these projections here that the stock is going to $10 or to $15. These are really just random number projections. And to me, the people that were making those videos have no experience actually trading the market, because a lot of this was already priced in. And the potential here for a buy the rumor, sell the news was coinciding quite well with the development of a bearish harmonic structure. So, overall, this isn't really a surprise here to see movements to the downside. What can be said here, though, is that we are starting to find some support here at these lower levels. This recent price low, does come in just above that $8 mark. So currently, what we're seeing here is a share price support zone that has moved up to that level, and the exponential moving average cluster on this 4-hour time frame continues to point in the positive direction. So relatively soon, we are going to see this 20-period exponential moving average, this yellow line, move right into that $8 area, and that should help to provide some additional support. So in addition to that, we also have some positive readings in the relative strength index. Here we can see that the prior downtrend in momentum has now been broken. So we've got this negative trend line here suggesting bearish momentum was in place. We have seen this break to the top side. The relative strength index is trading above its own exponential moving average. And then this shorter term reading here in the RSI is still pointed in the positive direction. On the negative side of this reading, we have to also note that we are now heading into overbought territory. This was another reason for the potential for sort of a bearish turnaround or a bearish reaction to that Federal Reserve rate cut. We're seeing a bearish pattern unfold as the share price is also heading into overbought territory. So, this is really, trading 101. There are a lot of situations here where an event risk is likely to influence a stock in a positive direction. But if everybody's aware of this and if everybody's talking about it, you're going to need to see more of a surprise in order to actually continue fueling prices in the positive direction. It would have taken an outsized rate cut there in order to see that type of reaction, and it just wasn't likely. We're heading into an election. This is another factor. The Fed is being criticized here for sort of playing politics a bit. I mean, it's not common to get rate cuts or even sizable rate cuts like this. A 50 basis point rate cut is a sizable rate cut. So to do that, right before an election, is not common, and it's definitely not going to be surprising if we see the Federal Reserve come under some criticism, for taking this type of action right as we're heading into a political election. So here's the current stock market update for SOFI Technologies Incorporated, stock ticker SOFI. Our high value trading strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.